In this video, we will discuss the criteria used to identify the best performing healthcare ETFs in terms of the 1-year total return, annualized 3-year, 5-year and 10-year total return, as well as an in-depth review of each of the selected ETFs. For the purpose of this video, we just focus on the ETFs listed in the United States, specifically those ETFs that had an allocation to healthcare sector of 90% or more. The first criteria which we looked at was a 1-year return of 15% or more. That resulted in narrowing down the 49 initial ETFs to only 32. Then we looked at only those ETFs that had been successful in generating more than 15% annualized return over the course of 3 years. That resulted in only 12 ETFs left. We then narrowed down further by looking at those capable of generating more than 15% annualized return over the course of 5 and 10 years respectively, resulting in only 8 and finally 5 ETFs being selected. You can see here the shortlisted funds. They are IBB, PSCH, IHI, FBT, and RYH. As you can see, all of them have an allocation to healthcare of more than 97.8%. In terms of the various criteria which we looked at, there is an additional thing that I have added here, which is about the fit score. The fit score basically measures how well a fund's exposures match those of a neutral benchmark chosen to be the most representative based on the data provided by ETF.com. And as you can see here, there is one particular ETF which has a low fit score of 41. Ideally, I would be only looking at those ETFs that have at least a 70 score or more. And for those reasons, I've decided to exclude PSCH ETF, which is the Investigo S&P Small Cap Healthcare. That would leave me with 4 ETFs to focus on for the rest of this video. Okay, let's overview these selected funds. As you can see, in terms of the expense ratio, the cheapest to hold would be RYH or Invesco S&P 500 Equal Weight Healthcare, with an expense ratio of only 0.40%. In terms of the weighted average market cap, RYH is also the largest with $56.22 billion. Looking at the price to book ratio, we can see that RYH is also the most undervalued among the 4 selected ETFs. It also has the highest distribution yield, which basically is the dividend yield for ETFs. One particular thing we have to consider here is that FBT, or the First Trust NYSE Arca Biotechnology Index Fund, doesn't pay out any dividend, and that's why its distribution yield currently is at 0%. Finally, in terms of the diversification within the ETFs, you are looking at iShares Nasdaq Biotechnology IBB being the most diversified among the 4, and the least diversified in terms of the number of holdings would be FBT. And remember, this is the fund that didn't pay any dividend whatsoever. Okay, let's have a look at the top holdings for these ETFs. For IBB, around 51% of its total assets are held in the top 10 holdings. The names that stand out here for me are Gilead and Moderna, which are associated with the vaccination development for COVID-19. And despite the high level of speculation, they also, to me, have the highest potential for growth. For IHI, on the other hand, 69.16% of its assets are held in the top 10 holdings, with majority being in Abbott Laboratories as well as Thermo Fisher Scientific. Finally, for FBT, around 37.17% of its total assets are within its top 10 holdings, whereas for RYH, only 18.51% of its assets are held in the top 10 holdings. Now let's compare these funds against the average of the 4. As you can see here, both IBB and FBT have been performing significantly better than the average. They have also been successful in accelerating their annual total return as we look at a shorter term time period. For instance, IBB has had an average 18.5% annualized return if you look at the 10-year period, a 35.7% annualized return on the 5-year time frame, a 42.6% annualized return on a 3-year time frame, and finally a 53.9% return over the course of the past 1 year. FPT, on the other hand, has also had a marvelous 62% annual return over the course of 1 year and an annualized return of 40.8% over a course of 3-year time frame. Comparison aside though, in terms of the annual return, you can see that 3 out of these 4 ETFs have in fact had an exemplary performance. And the way I define exemplary performance is basically looking at any annual return of 25% or more. While none of these funds have been capable of generating an exemplary performance according to my criteria in terms of the annualized 10-year return, still IBB, FPT, and RYH are clear winners in terms of their fantastic performance of beating that exemplary criteria. Next, for those of you who are interested in the principles of socially and environmentally responsible investing, also known as ethical investing, I'll be comparing these funds in terms of that. Ethical investing basically refers to the practice of selecting investments based on their ethical or moral principles. Ethical investors typically avoid investments from sin stocks in companies or funds which are somehow involved in supporting stigmatized activities such as gambling, alcohol, smoking, or firearms, or even those companies or stocks which either directly or indirectly cause damage to the environment or do not respect the social well-being of various stakeholders. As you can see here, it's a very tough comparison because we clearly have a winner in each one of the criteria. For example, in terms of the exposure to sustainable impact solutions, IBB has the highest exposure to such sustainable solutions with 35.40%. In terms of the damage to the environment through the CO2 emissions divided by every $1 million invested, FPT obviously is the best performing with the least amount of CO2 emissions caused by every $1 million of its investments, whereas when it comes to the weighted average carbon intensity, RYH clearly becomes the winner. Finally, in terms of the Clean 200, which refers to the largest 200 public companies ranked by green energy revenues, as we can see, IHI has the best exposure to such clean company. Now let's have a quick look at the sustainability scorecard for all of these funds. This scorecard evaluates the 4 funds in terms of their either direct investments or contributions to fossil fuels, deforestation, gender equality, civilian firearms, military weapons, or tobacco. As you can see, all of them perform very decently in terms of these criteria, with the exception of FPT, which doesn't necessarily get a very good score when it comes to gender equality. Here, personally, I find IBB, IHI, and RYH to fit my personal values. Now let's have a look at how much $1,000 worth of investment in each one of these funds 5 years ago would turn into over the course of 5 years. As you can see, in case of all of these funds, if you were to purchase $1,000 based on the opening price of 5 years ago, your investment would have grown over time. The best performance here comes for IHI with 124% growth or gain. It also has the highest amount of distributions or dividends with 35.69. The worst performance, on the other hand, belongs to FPT, which has grown only 34% and also has paid the least amount of distributions or dividends. As you know, and we mentioned throughout this video, FPT doesn't distribute anything, and its only amount of 0.69 belongs to its distribution back in 2015. The other thing which you need to notice is that IBB has had a stock split of 3-for-1 back in 2017. There you have it, folks. While I find all of these funds to be decent and worthwhile for investment, if I were to choose only one, probably I would be leaning more towards IBB, not only because of its greater diversification in terms of the number of holdings, but also in terms of its decent performance when it comes to ethical investing, as well as its annualized return. It has had a great performance over the time frames that I had been looking at. Which one of these ETFs do you currently own or plan to invest on? Let me know in the comment box below, and if you enjoyed this video, make sure to press the like button. Also, do subscribe to our channel for more regular updates as we post in videos around personal empowerment, finance, and investing. Thank you.